Hi, this is Jerry DeMaio from Family First Funding and Mortgage-Zoom.com, and thank you for joining. So the topic for today is the 6 things not to do before applying for a mortgage, or actually while you're in the mortgage process. And so I've selected these 6 items because in my 19 years in the business, that's right, 19 years, all of these things have happened multiple times. So while some of the things sound like, oh, of course not, why would I do that? The truth is that it still happens, even after you remind everybody over and over and over. So I'm going to do a video. Maybe this will help. So the 6 things. Number 1, don't open any new credit cards. So don't open any new credit cards. And the reason is because when you open a new credit card, you could lose 50, 60 points on your credit immediately, depending on how much usage you take on that credit card when you open it. I was doing Amazon returns at Kohl's the other day, and I got a coupon that said 35% off if I open a new card that day. Tempting, but knowing the process, and I'm not applying for a mortgage, but knowing the ramifications of that, I turned it down. So you go into Macy's, you go into Kohl's, you go into Best Buy, you go in any stores, and I offer you a credit card. If you're thinking about applying for a mortgage, or if you're in the mortgage process, just say no to open any new credit cards. So number 2, don't make any major purchases. So there's always a funny thing, at like a mortgage person was at the car dealer buying a new car, and they ran into one of their current clients. They're buying a car at that time. So don't make any major purchases that, number 1, your credit will drop. Number 2, we're going to have to count that towards your income to debt ratio. Don't go out and buy a boat. Don't go buy a new car. Don't go buy any of that. If the house is yours, if you're planning on buying a home, then make that your priority. No other major purchases until after you complete the purchase of the home. So now this one is confusing. Don't close. Number 3, don't close any credit cards. So I actually, many years ago, I had a client come to me and say, Jerry, you're going to be so proud of me. I paid off all my credit cards and I closed them all, and their credit dropped 170 points. So I know, listen, you would think I closed my card. Don't close your credit cards. That will severely hurt your credit and could damage your ability to get a loan. Number 4 is don't co-sign for any loans. Last month, I had a loan moving right along. Something popped up on his credit, and he said, oh, I co-signed for a car for my brother-in-law, but I'm just a co-signer. So in a scenario like that, that debt counts 100% against you. So if it's a $500 a month payment, that's a $500 debt to you, whether you co-signed or it was your loan. Now, this is a little bit more detailed, but if you've had a car that you co-signed over a year ago for someone, it must be at least 12 months ago, and you can document that they have physically, the other party has physically made the payment every month on time for the last 12 months, we often don't have to count that liability against you. But within the first 12 months, that will count 100% against you. Number 5, don't make any large cash deposits, especially cash deposits. So when we're doing your loan, we're going to look back over the last 60 days to see what deposits have gone into your account. If those deposits are something other than your regular paychecks or regular income or a refund from the IRS, we're going to ask you where that money came from, and you're going to need to document it. Now, like I get this one all the time. Oh, I lent my brother $5,000 and he paid me back. So there's going to be, unless you did an official contract with your brother with loan terms and loan things, and we could officially document it all coming back. Very difficult to document. So the safest thing to do is don't make any large deposits, especially cash. This is the time when you may say, hey, Jerry, I have money sitting around. I have, money that someone owes me. Call your loan officer and ask questions. There's never a dumb question. Ask first. Just don't do it. Or sometimes you're going to ring a bell that can't be unrung. Number 6. I know you laugh. This has only happened to me twice. So I had a client, their loan was approved. They had their mortgage commitment. And 2 days before closing, called to verify their job, and they quit their job. And they said, but Jerry, my loan was already approved. Why aren't you able to lend me the money? Well, so when a bank approves your loan, it's approved subject to you still having employment, and we're going to verify literally the day of or day before closing. So I know it sounds like, of course, but it's happened. Don't quit your job. So let me stop sharing my screen. Listen, I'd like to thank you for joining. I hope you found this helpful. If you have any questions, you can reach out to me at www.mortgage-zoom.com and schedule an appointment. Please subscribe, like, and click that little bell, and you'll get notifications of all the mortgage updates as they come through. Thank you so much for joining. This is Jerry DeMaio at mortgage-zoom.com. Have a great day.